Hello everyone and welcome to another episode of What the Chart Says. The recent conversation online now is whether the stock market is crashing. Today we'll be looking at that, some data to support it or to against that notion, whether it's crashing or it's just a normal pullback that we experience May and June. Okay, now before that, let's see our disclaimer. By looking at these videos or presentation, as the case may be, you acknowledge and accept that all trading decisions are your own responsibility. Okay, trading is risky. Some of the data that will be showing here are past performance, and that does not guarantee future results. All right, take time to look at the disclaimer. That's our disclaimer. Now let's go to the agenda. What do we have? Before we show the chart, before we review the chart, let's see the sentiment, whether it's supporting the notion that the stock market is crashing from the S&P500. We look at McClellan Oscillator and Summation. Then we go to the CNI fear and greed chart to interpret that as well. After that, we look at what the smart money and the dump money they are doing in the market. It's necessary to follow where the money is. That is where to make profit. And later we look at the volatility index for the S&P 500. Okay, let's go to the sentiment. The oscillator, the first one we'll be looking at this is short term. McClellan Oscillator is a short term. This is the S&P. The black one is the S&P. The blue is the oscillator that we're looking at. It shows the market breadth. So for now, it's below 50. It's going down. Generally, if the data is the oscillator is below 0, we believe the market breadth is not good and it's trending down, especially if it's below the green dotted line. While if it's above the red dotted line, that is to be it shows the market is trending up, and at the same time it can fall at that level. At below green it can rise, but generally above 0 we tend to say the market is safe to buy, while below 0 it's not safe to buy, rather short. But as I mentioned earlier, this is short-term data. It can reverse anytime, but normally you combine with a medium or long-term data. Let's go to the next one. This is more of a medium to long-term data, McClellan Summation. So this, for now, the oscillator is standing down, so it's not safe. Data is going down, the S&P 500 is going down. Now the same thing happens here. If the data is above 0, say the market is safe, but if it's above the red, you have to be careful, because the risk level, the market can reverse anytime at that point, and the market can reverse below the green dotted line as well to the upside, reverse down or above the red, reverse up below the green. So for example, let's show what happened during the COVID in March, April. Let's analyze that so that we get better understanding. So this January towards March, so already the market is showing some lower high. At the lower high, that is when the market is making higher high on the summation. Let's see what happened here on the oscillator. That we can't really see based on this data. Okay, yeah, it's already the data. Okay, market making new highs here, and this is the oscillator. So as soon as it goes below zero, it's already below. As soon as it goes below zero, yeah, that's when we should be actually looking to sell the market, to short or sell our holdings in the market. Okay, now that is but for now, what is happening now recently, this level is risky. It's risky, that's what it's saying, and the market is trending down. The market is trending down. This is the market is trending down. So we have a risk. We are presently at high optimism in the markets. So at high optimism, you're at a risk because the market can go down anytime soon. All right, let's go to the next one. The CNN fear and greed. Fear, traders and investors are greedy when the data is above the red dotted, while they are fearful when the data is below the green dotted line. This is when to buy. When it's when to buy when the data is below. When people are fearful, you start looking to cherry pick your data. Start looking at oscillator. When is it rising up? When it's trending up, that's when to start looking for opportunity in the market. That's exactly what happened in March, April. There's a lot of fear in the market, and what do we see? There's reversal in the market. So for now, what is happening now? There are a lot of greed. So anyone that's buying now, the market can still reverse upward, but it's risky. This is a risk level, and it's likely to go down. We look at the data later on. That's a S&P 500 chart. So, but for now, this is a greedy level, and the data can reverse. That's what we get now. And let's see where the money is. The smart money, that is the blue line, and the dump money is the brown line. So when this is the dotted black lines, we have 70 and 30. So any data above the 70 is at risk to reverse. At 70 and below 30 is at risk to reverse. Okay, but see what happened. Let's see this. So when the smart money is below 30, they are selling, and they are selling the market, and if there's nothing else to sell, they start buying from the dump money. The dump money are the retail traders, just like you and me, and the large speculators, the people that follow the trend. All right, so at this level they are selling, and when it start going up and there's nothing else to sell, they start buying from the dump money, while the dump money are selling. After buying at this high value, they start selling again to the smart money, and the smart money start buying, accumulating until they have nothing else to buy anymore. So they start selling to the market, while the dump money start buying again from the smart money. Okay, these are the people we want to follow. The smart money. What are they doing in the market for now? The smart money is flat. They're about to start buying because the dump money they are already selling now. So we'll see next week what is the activity. Are they selling or buying? But likely to be buying, because there is a lot of noise in the market now. People will be selling, and while the smart money will be buying. So we tend to see if smart money goes above 0.7, combining with other sentiment indicator that will help us to see what's when to start buying the market, or stay sit down and be looking at the market, what is happening. Now let's quickly go to the chart and see what is happening at the with the S&P 500. Before we go to S&P 500, a quick look at the volatility index for S&P 500. During the COVID-19, we can see volatility rising, and that's when the S&P was falling. Now now it's rising again. If we look at last week, this is swing high. If this level is broken, is violated, then we might see possibility of volatility rising again. But at the same time, if this swing low is violated, you might see a retest. Let's say you might see something like this, a retest of this resistance, or this resistance before the market, the volatility continue to fall. But for now, it looks like it's want to break the swing high. If this swing high is broken, I see a retest. If it's not strong, if it's strong enough, you might reverse it back, and you see volatility making a high. Alright, so now let's go to S&P 500 and see the data that we have from S&P 500. S&P 500 is the daily chart. This is the daily chart. We have seen a lower high, there. That's a lower high, but the market is here to break any low. So the data is now coming for the swing low here. If the swing low is broken, that will be dangerous for the market, and we can see a retest. If the support level is the resistance now, it's not strong, it's strong, it might take the market down. For now, we've seen a lower high, which is not good. So the data will test this low here. Test this low. That's on the daily. Before then, let's go to the monthly to analyze the monthly. This is the high. We've been a good trend, a good uptrend. So that's the market violated the low here in March. I suppose that was in March. Violated it, but on monthly it didn't close below it, which is good for the month. For the monthly outlook, let's see the weekly. It's closed below it, which is not good for the weekly outlook. The weekly has made a lower high. It's made a lower high, but yet to make a lower low as well. So weekly is yet to make a lower low, which is good. Daily is yet to make a lower low, which is good. Short term is yet to make a lower low. So for now, what I see is a pullback and not a crash of the market. The market is, to me, it's not crashing. We can see a pull. You might see a retest of this level of the bullish order candle. Market can get to 26,500, 2650 thereabout, or even lower a little bit here, 2530, and retest. We can see something here based on the weekly, something like this, and market retesting this resistance level. If the resistance level is strong, it might go down, but if the resistance level is a bit weak, you can see something like this, and market start going up. Okay, let's go back to the daily and see what might possibly happen next week. For next week, we've seen a a lower high. The data is coming here to test it. S&P 500 is coming to 900 to test the swinger or the support level here. So it's not strong. The market might go below it. The retest we determine whether we're going lower or we're going or higher. But for now, what I see in the market, it's not crashing. It's not crashing, but we're at a peak level, no doubt about it, based on the sentiment. The market is due for a pullback, so maybe that's what we see. That's what we see. Let's see the fib level. If the fib level passes this level, then we might be seeing a crash actually. Passing to 400, we might see a crash, but for now, what I see in the market is a pullback. Alright, that's from my analysis based on the sentiments and the data from S&P 500. Ladies and gentlemen, that is my analysis. If you have any comments, any addition, anything you want to add, you can make your comments, and that will be helpful for the viewers. Thank you very much. See you some other time. Bye.